Good morning, and welcome to another WealthTech Talks from the Wealth Mosaic. My name is Stephen Wall, co-founder. Maybe some of you know me by now if you're listening to these regularly. I'm joined today by Jamie Keane from aixigo. Good morning to you, Jamie.
Good morning.
Today we're going to talk a little bit about cash flow planning and specifically the aixigo solution. So we'll do that shortly. We've got an hour with you today, up to an hour. I'll run through the structure shortly. But Jamie, if you could just give a quick introduction to yourself, your role, and to aixigo, and then we will go from there.
Absolutely. Thank you. Hi, everybody. I'm Jamie Keane. Not sure if you can see this huge banner that I've erected this morning, but I work for aixigo. I'm the UK and Ireland country manager for them. I joined in December last year, so it's been a very interesting first year to be at a new company, but a great one. There's been lots of opportunities to speak to firms about their digitization and automation plans. I've been in the industry probably almost as long as you, Stephen, over 20 years now. Worked for firms like Standard & Poor's and Morningstar in the past, but delighted to be with aixigo now. Quick introduction about what aixigo do. We've been building wealth management solutions for about the same amount of time I've been in the industry, over 20 years now, across risk profiling, portfolio management, portfolio analytics, and reporting. Got a very powerful risk engine, and in total over 100 different solutions covering the whole end-to-end spectrum of wealth management and advisory services. Everything we do is API based, so we can put solutions together to meet the exact needs of our clients. In terms of the sort of people we work with in the UK, we work with Hargreaves Lansdown. Then across Europe, we have clients like Commerzbank, BNP Paribas, and Vontobel. I should mention I'm also joined by Simon from our consulting team, and these guys do a fantastic job. They're the ones that do all of the real work, and from a cash flow perspective, we've done a huge amount of market research, working with clients to find out what the real requirements are, and then go away and build it, but then stay in the background with their camera off to let people like me come in and take all the credit for it. But Simon and his team have done a fantastic job.
Perfect. Thank you, Jamie, and welcome, Simon. Just for clarification, you have been in the industry longer than me, a few years. You've got a few years on me. So for everyone listening in, we are going to talk about cash flow planning, and Jamie and Simon are going to introduce and demo the new solution. I mean, from our perspective, this is a really interesting topic area, particularly from a technology perspective, as we look at, many of the changes that are taking place in and around wealth management. Let's say maybe things like cash flow planning were a little bit slower than other areas to develop, but we think it's if you look at the changing demographic, the new experience that clients expect from wealth managers and how wealth managers are seeking to adapt around things like financial planning, this is definitely an area where technology needs to be at the forefront, from the advisor experience, the client experience, from engagement, on all sorts of different things. So I'm going to pass over to Jamie and Simon now, and they will do a 15 minutes or so demo, and then we'll open it up to Jamie and I will have a conversation. We'll talk through trends and topics and a bit more detail about the solution and why it's relevant in the UK wealth management space and perhaps beyond. And then we, from anyone listening, if you have any questions, happy to take them as we go through. So Jamie and Simon, I'll hand to you, and look forward to having the conversation in 15 or so minutes.
Fantastic. Thank you. I'm going to start with a slide, just one slide, I promise. Everybody loves a good PowerPoint, but then we're going to dive straight into the demo. But just to set the scene, and before we move into the nuts and bolts of the cash flow planner, I'd like to just take a minute to explain why we feel that our approach to building this tool, and indeed the solutions that we build in general, is the best way to do it for our clients. As I mentioned, we build everything with an API-based approach, and that means that our clients can use this tool in particular in unlimited use cases. What we're looking at here, so all of the individual calculations you can see on the left, which together form what we feel is a very comprehensive tool that we'll talk about on the right, are built as APIs, which means they can all be used independently. What do we mean by this? So, for example, our clients could just use the income calculator on their website, for example, to let the customer calculate gross to net income, whether they're in England, Scotland, and so on, or the asset calculator to simulate something like the effects of the purchase of a fund in a general investment account, or within an ISA, the effect of this on the future assets. the loans and liabilities calculator as part of, say, a process of offering a mortgage product, or the pension calculation transfer, as the name suggests, that could be used to simulate something like the impact of a DB to DC transfer. If we move over to the right side, when you use all of this together in the Cashflow Planner tool, the full tool, we add the very important and very niftily named liquidity pool and reallocation API. And this is fundamental to the tool, really. It combines all of the APIs and calculations and simulates their interdependencies. So, for example, you have an income shortfall and you have assets. The tool shows how the assets decrease to plug the gap. The engine will think about the reallocation as dictated to work by the firm, i.e. in what order should assets be sold to cover the shortfall. Or then, for example, in a more complex case, like with a DB transfer, where should this newly available money go? What happens if we buy assets with the money, if we pay off our mortgage, and so on. So as a use case, for example, you could start on the left, or a firm could, with an individual tool used by a customer on the website, then move over to the right side and transfer the results as the advice process begins. It's critical, as you would know, that the results are the same. And we've seen this as a big issue for clients, where they use different systems and APIs to get the results on the left from the customers in the first instance. Then when they need advice and move into the advice process on the right-hand side, different calculation methods are used. So results are different, which can obviously cause big issues in the advice process. And obviously, this is not an issue with our tools. I will end the slide. If Simon, you could share your screen now, we'll dive into the demo. Fantastic. So obviously we're going to start with one that we have prepared earlier, and here we've already captured data from the financial planning questionnaire, everything like gross income, assets, retirement needs, pensions, insurance, the tax situation, residency information, the family situation, whether the people are single or married, which will affect simulations from a tax perspective, and so on. But a good starting point we find is often the assets chart, which is created from all of these inputs. And if we click on a bar, let's go to the first bar, for an individual year, we can see the asset breakdown. So the first bar, as we said, equals the current situation, and then we can break this down further by asset type, and then click on information for additional details about each asset. So for investments, you can see a full tax breakdown across various wrappers, so taking into account all appropriate tax considerations for income, dividends, and so on. For cash, a little bit more straightforward. It will show any money sitting in any accounts, current accounts, savings accounts, and so on. And then for property, obviously you'd expect to see the primary residence, the family home in there, but it would also record any investment properties, buy-to-lets, and so on. If we then go back to the chart and quickly click on some different years, we can show how the situation changes for each asset class as time progresses. What we want to do in this demo is sort of drill down a bit and start to consider a couple of things. Why is the asset chart shaped the way it is, and particularly why are assets decreasing so fast? So to start to understand this, we're first going to take a look at the income chart. So this is showing annual income over time. Now, importantly, we should say these are all net values. So we incorporate complete gross to net calculations for each country within the tool. Again, you can click on a bar for additional information and see details about both the essential and the discretionary income, so the must-have and the nice-to-have for a decent standard of life income. And from this, calculate the shortfall, which in the chart we can see should be quite clear as these alarming red lines. If we click on information again, this will provide additional information, this time with a much more detailed breakdown on taxes. So it will calculate income tax, pension contributions, national insurance, and so on to arrive at this total net income. We'll follow the same path again. We'll click on other years to again show how the tax and income situations differ in different years. But the key takeaway here is that the shortfall is an issue, and this is something that the advisor is going to need to try to address with the customer. So to shed a bit more light on this, first we can take a quick look at loans and liabilities for some of the big necessary outgoings, as you would expect in here. The chart shows what is owed, and this can be broken down into the big events or the big amounts like mortgages, loans, credit cards, etc. And typically you'd expect to see, as it does here, that the amount owed is decreasing over time. But now to start to get a better understanding of the situation, we'll switch to compare mode. This is a really important feature within the system. Lots of different options here, but we're going to start by comparing income at the top to assets. And in this example, you can see that where there's a shortfall in net income, there's also a decrease in assets. And this is exactly what we would expect to see in this example. So when an income shortfall is detected, the system is set up to first look to fill it with any other income, so such as from inheritance or a payout from a protection plan. Now, obviously, in any given year, this is quite unlikely to be able to solve the problem. So what the system will then do is look to liquidate assets in a set order. Now, we'll show how that order can be changed later on. But what we can see here, there is a shortfall to 2034, and then you'll see at the bottom that the assets are decreasing to cover this. Now, of course, when selling assets, we're considering all tax considerations like capital gains tax. So to see the potential impact of these issues, we come on to the next critical functionality of the system, which is events. These are hugely important to the system, and where do we start to incorporate the what if scenarios? There's a huge amount of flexibility here. We show some examples here: pension transfers, that could be DB to DC, or just regular transfers. Income drops if somebody's losing a job, death of one of the income earners, a market crash, or any other expected future expenditure, like, let's say, children going to university, and these can be regular and ongoing or one time, something like the purchase of a car at retirement. If for now we're going to choose the event income drop, we'll do that for both charts. So what we will see clearly in the top one, the shortfall increases, and the asset chart will also decrease to plug the gap. But at least in this example, there's some money left. What we're now going to do in the bottom chart, though, is add the event kids going to university. We expect that is something that's going to happen. And now we see we have quite a big problem. The money's going to run out about 2033. Now, of course, this is a real opportunity for the advisor to talk to the customer and help to improve their situation and ideally avoid this problem occurring. What we're going to do next is look at another compare mode, and we're going to go to assets to assets. So in this example, we're going to use the bottom chart as the actual client situation with the drop due to the income shortfall that we've discussed. In the top chart, we're now going to run a scenario with a market crash in 2035 and see the consequences. Okay, so again, the money is getting low, and if we pick the year bar that this has happened, we can compare the two and see a big drop in the investment values, and click on information to see a bit more detail. Obviously, the cash situation stays the same, but the situation for investments is looking a little bit dire. Then, as if things weren't bad enough for this family, we can go a step further and simulate the primary earner's death in 2030. So we'll see there that the survivor is actually going to run out of money in 2036, I think there. And again, so a very good starting point for the advisor to be able to help the customer. So in this example, by recommending life insurance, but rather than just making this very theoretical and saying that would be a good move, we can actually go and show the customer the effect this would have. So let's go and do that. We're going to go into configurations. Now, this is where you can change data and events across all inputs, and obviously this is very controlled, has controls around it so that only plausible data can be entered. The advisor can't go rogue and start entering any figures in that they want to. And of course, this data doesn't have to be manually entered. It can all have been pulled from other systems or from the planning questionnaire, or perhaps the customer had entered some of the information on the website, as I was talking about on the slide, prior to the advice happening. But as needed, we can make these amendments across income, assets, cash, investments, loans, and so on. And in this case, for protection. So what we will do is tick the option to include it in the cash flow scenario. Another thing I mentioned earlier, you also see below here the liquidation order. So this means how assets should be sold if extra liquidity is needed. So for example, in this instance, to plug the income gap, and we can exclude things like the primary residence from this as required. And then below this, we can go into events to include in scenario analysis. And for this, we can change the assumptions for things like pension transfers and drops in income percentage, the age of death for life insurance scenarios, market crash percentage drops, and so on. So the system has been designed to be very flexible to change these inputs in the data as needed. If we go back to the current situation and the problem that arises with death in 2030, you will see now the effect that is had by adding protection to the plan. And you can see, if you click on that year, the difference reflected in the chart, which has improved the financial situation. And again, by comparing, you can see exactly what the difference having this protection in place makes to the assets, which improves the situation, but it doesn't completely fix the problem, as money is still starting to get pretty low when you get into the 2040s. So for an additional level of detail, actually, at this point, we've also recorded the drop in necessary required income if only one of the couple has survived, which of course would also improve the situation. So just to quickly show this, we'll switch back to income versus assets. And here you can see the effect this has had. So we know that the income has dropped, but we can also see, because there's only one survivor, that expenditure has too. So just to round things off, let's go back to assets versus assets and look at what else can be done to improve the situation. In this example, let's assume that there is a DB pension that can be considered. So what we'll do is choose the event pension transfer from DB to income drawdown. So we'll see again that leads to a better situation from 2040. And again, we can compare the without to provide a clear illustration for the customer. So that's the end of the demo. I think the idea really with this tool is not only can it help to capture all of the inputs, it can display them, their interdependencies and their effects in various scenarios to help really bring the situation to life for the customer and just provide a very easy to use user experience for the advisor that makes it very straightforward for them to articulate ideas and to adapt to react to situations or whatever life throws at their customers. That's the end of the demo. Thank you very much, Simon.
Great, Jamie, Simon, thank you very much. Very interesting, powerful stuff. So let's have a conversation. Let's sort of get into a little bit more detail about why this is needed in the market, and a little bit more about some of the sort of fundamentals of the product. So Jamie, in general, I gave a bit of an introduction at the beginning, but when you think about why wealth managers might need to consider a cash flow planning solution, what would you identify as the background to that and the benefits and opportunities that they can derive from engaging?
I think the key thing is that firms need to not just consider a cash flow planning tool, they have to consider a good, robust, comprehensive and efficient one, not one that will just sort of plug in so firms can say, yeah, we're doing financial planning now. It needs to really differentiate their offering, provide a very individualized service that will really benefit the customer and show that the advisor has this very clear understanding of their circumstances, their goals, events in their life that could have a big impact, and then provide sort of very robust, appropriate actions. We know that financial life is complicated when you look at all the things we've had to include in this tool. That's like income, pensions, investments, cash, property, loans, protection, and so on. Advisors have to take all of this information and then like help simplify it, lay out a plan that is real and achievable for the client. And obviously this year we've seen, in terms of financial uncertainty, situations can change very rapidly, and advisors need tools that, well, in this instance, or what we've seen this year, that would have allowed them to have stress tested scenarios like we've seen, and then have an appropriate action plan, or if something happens completely out of the blue, then just to be able to react quickly, to revise their advice, and to reconsider all aspects of the financial situation in that and any scenario really. So whether it's furlough, loss of job, kids through university, as we saw, early death, as unfortunately we have to consider, and that with or without life insurance, and then maybe some happier things, buying investment properties, buying a car, transferring DB pensions, etc. But always making all of these scenarios very real and very personalized, and just not generic, not one size fits all, which we may have seen a bit of in the past.
Perfect. So there's the complexity, there's the uncertainty. So things like COVID come along and throw us all a curveball. If you think about the evolution of the industry, are there other drivers and influences that make cash flow planning, financial planning more relevant than maybe it was, 2 years ago, 5 years ago, or whatever?
There's been a few that we've sort of been considering. I suppose we have to mention the FCA and their requirements and their regulations for planning across the monetary values, how they're treated, how you treat growth rates, interest rates, inflation rates, how tax needs to be handled, and so on. But we can't put it all at the at their door. Just the general complexity of conducting good cash flow planning is only going to get tougher in terms of all of the different inputs that are required, all of the details that are needed, as I was saying before, to make it very valuable and personalized and real. A couple of other things we're also seeing more and more, and I know you'll have seen this, that firms are needing to differentiate their offering more. There's a lot of competition in wealth management, and we're seeing customers are more willing to switch. So again, firms can't just say we're doing financial planning. They need to do something that differentiates their offering, that reflects their brand, their investment philosophy, and so on. And that ties in very nicely with the third one we've seen, which is customers starting to have more demands for personalization. We've been seeing this for the last year or two on the portfolio construction side more, where people aren't willing anymore to be treated exactly the same as everybody else in risk bucket 4, say. They're starting to want a more personalized service in terms of the products they're being offered, but also sort of getting this earlier in the advice process and getting a more personalized service in the financial planning as well. So there's some of, I guess, the key trends we've seen, and why we've launched the product in the way we have.
Perfect. So there's complexity in this, and obviously there's uncertainty in terms of the environment that we live in and what can impact our own financial plans as individuals. You talked a little bit about some of the trends, so personalization would be one. Obviously in the demo you showed us some of the components, so, and I think you talked a little bit about, a standard product would give you X, but you need to think about more, and specifically in terms of differentiation. So can you tell us a little bit about the kind of core components? So let's say I'm a wealth manager, I want to do financial planning, I want to have a more robust cash flow planning proposition or capability. What is the core components of that? And maybe if beyond core components, is there something that's the extra layer that really would make me stand out from my peers or competitors in the market?
Yeah, sure. I mean, at the highest level, what we've tried to do with this is strike as close to the perfect balance that we can find between complexity and simplicity, so that the tool is doing a huge amount of heavy lifting in the background in terms of being able to take in all of the inputs that I mentioned together and having very powerful algorithms sitting behind it for the what if scenarios and so on. But it's still very easy to use and avoids manual data entry and rekeying as much as possible. It's got to cover the full spectrum of planning, so the income, the pensions, everything else that we talked about, and be able to do all of these very, very powerful what if scenarios, got pension transfers, income drops, death, market crashes, all of the individual events we've already discussed. The other components, I'm mentioning FCA again, it's got to be taking into account all of the regulations and requirements, not just today, but it's got to stay on top of that over time to make sure that clients are always compliant. I guess more from the firm perspective, this is important. Obviously, we talk a lot about the customer experience and the advisor experience, but from the firm's perspective, the solution has to be easy to implement. It's got to be able to clearly add value for the advisor, but also from an integration perspective, it's got to be able to very, I guess, efficiently pull data from the financial planning questionnaire, maybe data from the CRM system. It's got to efficiently get all of the data from the maintenance data set, capital market assumptions, and so on into the system. And something else I was alluding to a bit in the PowerPoint, it's got to be very flexible in terms of having these different components available for pretty much any use case. A light version on the website, say, so that a customer themselves can do a simple gross to net income calculation, for example. But it's also got to be very customizable, and this is where the API approach helps. So again, we don't want to be offering this one size fits all tool. It has to be customizable to the use case for the firm, but also to incorporate their brand, their investment philosophy, and so on. And from the component perspective, be able to be split out. So a light version could be used on the website, for example, as a kind of a teaser into the advice process. And as to why it has to do all of this, I mean, it has to work for the firm, the advisor, and the customer. Otherwise, it's just not going to concede. The customer won't be getting this personalized experience that they're expecting. The advisor won't want to learn the system. We've heard of this happening in the market before. Advisors are given this new tool with all the whistles and bells, but it's going to require a huge amount of training and then ongoing heavy lifting to use. And the advisors just aren't incentivized to use it. So it needs to be something they want to learn, want to use. And if this happens, then the firm will hopefully get the ROI and the justification for putting it in the first place.
Yep, perfect. So that flexibility is key. You've actually touched on my next question quite a lot in that previous answer, which is really across the three pillars of the business. So yeah, the business itself, the advisor, relationship manager, private banker, whatever they want to call it, or whatever they call themselves, and the client. So this obviously got applications at each level. Was it built for one over the other? I mean, was it principally built for the advisor experience or the advisor capability? Can you tell us a little bit about, where the benefit is and who benefits and how they benefit?
Yeah, I can. And yes, I guess I did allude to it before, but it does have to be all three. And I think that's what we've always tried to do with solutions at aixigo. Consider them from a minimum of three perspectives. So how is it going to work and add value for the customer, the advisor, and the firm, both at sort of the macro level, but also for the users within the firm, some of the people that might be having to maintain it, the administrators of the system within the firm, or like the portfolio managers if we're moving more into a portfolio management system. So we always try and consider it from every perspective. And I think it has to be all three. It has to be easy to integrate and implement, as we've discussed, so that the advisor can very easily and efficiently use data from all of the different systems we've talked about. I've said it before, but I will stress it again. There has to be limited manual entry and ideally no rekeying whatsoever. And if this is all efficient, then you do get the better service for the customer. And I think they're all really closely linked anyway. I mean, to deliver real benefit to the advisor, I don't think we'd ever hear an advisor saying, yeah, this tool is fantastic. The customers don't really like it, but we love using it. It has to work for all. Otherwise, it's not going to be a success. And I guess this kind of comes back to what we say about aixigo, about trying to strike this balance between complexity and simplicity. We're just trying to make these complex ideas and calculations easy for the advisor to articulate and get across to the customer, and then for the customer to understand them, which will then give more time for the advisors to get involved with value-adding activities, and ultimately, to put it a bit more bluntly, for more sales and better ROI for the firm.
blunt is good, right? We all know what this ultimately comes down to. We all have.
Exactly. Let's sell more. Let's help them sell more.
Yeah, exactly. So we've talked a little bit about the market context and some of the trends and the drivers and some of the benefits and who it's for. If we touch a little bit more on the solution now and some of the capabilities and why it was built, what can you tell us actually about that? Why was it built? What is the sort of market context that meant that this solution is relevant, different to its competitors, better perhaps?
Sure. Well, I mean, it did feel like a natural addition to our offering, I guess. As I mentioned at the start, we are working with clients on the full spectrum, from financial planning questionnaires all the way through to like ongoing portfolio analysis and reporting. And we were already doing some lighter cash flow planning on a case-by-case basis with clients, but we felt it was a really good time to sort of build out a very robust offering. So as well as it seemed like a natural next step for us, but would also, in the loosest sense, so Simon and his team had been doing a lot of market research and closely working with a client that showed us really there wasn't a UK based solution, at least, that they felt could really easily be integrated into existing advice processes with, I suppose, the right balance of usability, but also this complexity to be robust and to be compliant today, and with the confidence that the firm would know that it was compliant going forward as well. Another issue that we'd seen, and why we wanted to bring this to market, is that sometimes firms are using different tools in the process. And again, going back to the point I was making in the slide, we see firms that are using some tools on their website prior to advice, so for the customer to be able to enter some information, and then using different APIs, different tools within the cash flow process once the advice has started. So there's inconsistent results between the two, which is obviously a bit of a problem and just leads to more headaches for the advisor and the firm. So we built the planner so that the solution can be delivered, as I said, in whole, or in part, and either as a more of a standalone solution, ideally as part of an end-to-end aixigo solution. I would say that, but of course most clients will already have some elements of this journey already, so we wanted to make sure it would be very easy to plug into existing advice processes as well.
Yep. Okay. Integration key. What can you tell us? I know you touched on this already, but can you sort of go through again the core components of the solution? So what it actually consists of. Just remind us of those facts.
Yeah, sure. It can incorporate any income, pensions, assets and liabilities, insurance, very powerful what if scenarios for full like holistic simulation. Some key things that will tie in with FCA recommendations. All values are adjusted for inflation. Everything is calculated net of tax to be as relevant as possible for the customer. All taxes are being treated very accurately and included across each UK market. So we've got capital gains tax, income, lifetime allowance, inheritance tax. We've mentioned a lot about what it will do, take into account any other recommendations or requirements from the FCA. Hopefully, as you started to see, we've tried to make all the graphical displays very good as well. Coming back yet again to the complexity versus simplicity idea, we want all of the heavy lifting, all of the algorithms to be doing their job in the background, but it will allow the advisor to articulate the ideas quite clearly with a good graphical display to the customer to show things like we tried to there. This is what will happen if you don't act, or if the kids go to university, if the worst case scenario comes and that the primary earner dies, and these are the sorts of things you could do about it. And hopefully you could see we could get to those results quite quickly in a quite a visually compelling way. So yeah, the graphical displays are great. We've tried to make these user experiences great for everybody involved. And the other thing, like the core component, I guess, is the API technology it's built on, for the reasons that we've discussed. It has to be easy to integrate regardless of the use case. It has to be easy to subdivide and split up the solution if customers just want to take certain elements of it. And something we haven't really touched on much yet, but it has to be easy to personalize for the customer. Now, of course, that does mean look and feel, but also to incorporate what's important to the firm, what they see as their USPs, the elements of their brand they want to get across. And now you've given me permission, so I'll be blunt again, so that they can sell the products that they want to sell and push them more. And yeah, bring all of this together just to make it a real sort of value add solution for the advisor, rather than something that just has to be done as part of the advice process.
Yeah, perfect. We've actually had a couple of questions from the audience, and they're sort of touching on areas we've talked about. Thank you for those listening in for sending some questions in. We'll just come back to those at the end. It's very clearly touching on what you just talked about, Jamie. Just thinking, so let's say, I'm a wealth manager, a business advising whatever type of client in the UK, and I'm looking at this. What is my scenario, and what is the kind of use case that I'd be considering to look at this solution?
The use case, I guess you'd like me to say something a bit more detailed than, well, it's just if you need financial planning, that's a great use case. I'll try and come up with something a bit better than that. And we have touched on a lot of it. I suppose firms are seeing, the conversations we've already started having is where firms want to use the tool to differentiate their offering, to add this value, not just to tick a box and get the clients through the financial planning process. It's I guess it's a move towards the hyper personalization that I mentioned. We're starting to see more in portfolio construction, and we're certainly seeing demand from that as people are moving. I think the wealth management industry is moving very slowly towards like the Netflix or Amazon model, but people are getting hints from that about what they can expect about this much more personalized experience. So we're starting to see, or we're hearing from firms that their customers are expecting that across the whole advice process, and obviously that includes cash flow planning. From a use case perspective, I guess also the very complex cases, it's particularly useful. We've designed the tool so that it works with anything from the simple use cases through to the very complex ones where there's assets across multiple classes, multiple pension pots, complex tax and estate planning, and so on, which I guess leads to a business case. So firms want to achieve all of this capability, but without the massive integration projects, massive implementation headaches, and they don't want to be having to increase the advisor workload. If the advisors, as we were saying earlier, if the advisors don't love it, they're not going to use it, or uptake is going to be slow. So at the forefront of our mind when we went through how to build this and how we wanted to propose it to clients, we were always very conscious of making it very easy to integrate, very easy to implement, and perhaps most importantly, very easy to use.
Perfect. Actually, looking at one of the questions that comes in, it aligns nicely with what I want to talk about next. But quickly, if anyone wants to ask any further questions of Jamie or Simon, indeed, feel free to type them in, and we'll do our best to answer them. One came in earlier, and it aligns with what I wanted to ask you next, which is, I know you touched on this, but let's sort of consolidate it into one answer, which is differentiation. So the question that actually came in is why now and why aixigo? So no shortage of solutions in the market is their view. At least 20 vendors playing in the financial planning space and available to UK-based wealth managers of different formats. So what are the top three competitive differentiators for aixigo from whoever else is playing in this space? What makes you stand out and why, basically?
It's a good question. I think we want to be conscious of the fact when we're talking about what we've done in the market research. We did see that there's already some very good tools out there. So I think we're trying to stand on the shoulders of giants rather than reinvent the wheel, to give you two cliches for the price of one there. But yeah, there were certainly some really good tools out there. We did feel, and this was with in collaboration a little bit with some clients as well, that there probably was a tendency for some of them to veer too much either towards complexity, so it would require almost like real experts to be able to use them, or just the sheer amount of inputs that would need to be manually entered just meant it was not really feasible for advisors or firms that were looking to grow their client base. And then some would go to the other end of the spectrum, if you like, and too simple in terms of the inputs, the tax, the scenario analysis, and so on, that they just weren't able to allow the advisor to add real value to the process. I think that's one of the things, again, at risk of repeating myself, we wanted to strike that right balance between complexity and simplicity, and make it very easy to use, very efficient, very easy to understand. The whole tool end to end has been built with FCA regulations and recommendations in mind, across, as I mentioned, monetary values, how it treats growth rates, interest rates, inflation rates, how all of the tax is handled, how estimates where data is unavailable are entered, and so on. But perhaps the one key thing is the API approach. So we were very conscious that even with the sort of flexibility we've talked about, we didn't want firms to have to consider this as a one size fits all plug and play. We wanted them to be able to come to us and say, this is our use case, or very often these are our use cases. We want the customer to be able to do a little bit. We want to tease them in on the website. We want the results to be transferred over if and when the customer becomes involved in the advice process. We want to be able to subdivide, so we can do some income calculation or help clients with the mortgage, but there has to be consistency across the end-to-end process. So I think the API approach, which allows us to allow our customers to fully customize the solution, but also divide it up, use it as a standalone tool, or ideally build it into, as I mentioned earlier, either an aixigo solution or an existing solution, because we know people don't necessarily want to rip everything out and start again just to get a great cash flow planning solution. So it can be slotted in, I won't quite say seamlessly, but the amount of implementation and integration work is minimized because of the way we have built this with the API approach.
Perfect. Actually, Jamie, there's been another very good question come in, which I think ties in very nicely with some of the things you said, which is, I suppose, about the idea of rekeying. So it's about good data, garbage in, garbage out kind of thinking. So let me just go back to that. Hang on, where is it? Sorry. You can probably see the question too, but right information is available, especially around cash flow, asset, liability information. How do you ensure to capture the right information from clients, basically? So, if they've got a significant life event, they're not necessarily going to be putting that in a system. So how does the system capture that? How is it accurately recorded and therefore made available to the institution to employ in financial planning? So what can you tell us about the technological infrastructure and process that allows that to happen?
So you've used the word technology now, so you've given me an out, Stephen. So I'm going to say, Simon, you sat very patiently. Do you want to chip into this?
Yeah, sure. So I think it's what we have established, and as APIs are also plausibility checks. So, and we have different versions of the plausibility checks of different areas, starting with, do we have all basic data to run even a cash flow simulation? That's the first API we have established. The second one is more about plausibility checks when we have data, which is, for example, when the client states that they have a property, for example, a primary residence or another property. And so we offer an API which then asks the question, is there really no mortgage when there is no mortgage captured? So there are some plausibility checks already established, and they can be enhanced in a generic way. And the third API we also offer is around when the advisor or the user does not use, for example, a pension transfer scenario or a market crash, and then you want to leave the cash flow tool, that we could raise up the question, do you really do not want to consider this or this event? So there are plausibility checks, API based, in place. We do not show them in the short demo. We will then need some more time, but yeah, they are in place.
Thank you, Simon. I actually have one more question. It relates to some work we were doing recently, some research in Switzerland, and it was talking about client prospecting, and it was about accessing different data sources to build a profile of a client. So, all of the social media sites, basically anyone's kind of digital footprint, I suppose, and bringing that in where allowed. And I think that's an interesting point too, but how you build this stuff. So when someone has a life event, you're not necessarily been telling your financial advisor, you're not necessarily putting it in a system. Does the toolkit work with external data sources, social media things to pull in sort of profiling information, or I hear that sort of thinking, you hear that sort of stuff in data analytics. Does it do anything like that, or is that a little bit too future oriented, or not quite there yet?
Do you want to go for that, Simon?
Yeah, sure. So basically, everything is prepared. So we have the APIs, which you only have to feed with data. And so it's not, for us, from a technology perspective, it's not important where the data is coming from. But as you mentioned, the social media stuff, etc. So that is on our roadmap for the Cashflow tool. And but we do not want to build it without a real good idea. And so we have to take a little bit time. It's on our roadmap, and we will think about that. It's a really valuable point.
Yeah. Okay. Perfect. We see a couple more questions coming in. We've got some good questions, but actually, Simon or Jamie, I actually wanted to ask us, I suppose, my final question, which was the future roadmap. So you are where you are now. It's a powerful kit. It's coming into the market. What's coming next? So we've talked a little bit about some of the data sets you might bring in. What else is kind of part of that development roadmap?
Again, I think Simon could articulate this better, which is frustrating because English is his second language. But I could just say, one of the first things we're going to look at is just trying to get more granular at an asset class level, just by using different growth rates and volatility rates for each. I believe there's also some plans we're looking for partnerships, perhaps research providers, just to make the tool at least potentially a little bit more off the shelf, with the caveats that I was mentioning earlier, but just providing more of the complete solution, because we're data agnostic, but we think it's an area that it might make sense to explore some partnerships. I don't know, Simon, do you have anything else to add? You're a lot closer to this than I am.
Yeah, maybe two additional points. From a technology perspective, we have on our roadmap the clear idea and target to bring the Cashflow tool into the cloud. And that is really aligned with Jamie's answer regarding possible partners, regarding data input for research perspective. And from a business perspective, we are planning to enrich the events and bring some more common protection plans, for example, in place, like family protection or critical illness, etc. That will happen very shortly. The cloud one will then follow in the next month. Perfect.
Great. Both. Well, let's turn it out to some questions. We've got a few more questions coming in, Jamie and Simon. So we've got one on financial planning and the sort of goal-based approach. So effectively, what is the question? So goal-based planning, cash flow planning, neither the questioner states is perfect in isolation. Each has elements that are strong, but maybe weaknesses that the other can sort of support. So is the aixigo tool capable of reverse engineering the workflow to allow advisors to conduct more client-centric dialogue? So I suppose is it able to bring in the goal-based methodology alongside what it has now?
A short answer is yes. And I think it's a really good question, and it's all about the definition. What is a goal? I'm not sure if there is already a market standard, because it's used in each and every use case. But always then the question is, what is the goal? And all APIs and calculations can do reverse calculation. So, for example, you can just simulate how much do I have to have for a cover amount for a life insurance plan, for example, to not fall in any shortfall in the future. That's already from API perspective built. It's not yet in the front end. but that's also because normally our clients or customers will build their own front ends on our APIs. And so the demo at the moment, as it stands from a front end perspective, is more or less a showcase, and it not reflects all the capabilities we have from the APIs, because elsewise it would be really huge, and normally, as I said, it's not used. So what we could do, for example, we could also run some APIs and just demonstrate that when there is an interest to do it. Maybe not now, but for a later meeting.
Great. We have a further question picking up on the goals, and what is a goal? So the thinking is here psychological rather than technical. So does the solution, or can the solution help the client to define what their goals are, help them accurately pick the brain of the client and capture that kind of thinking? Is there any element within the system there that allows the advisor to take that approach?
Yeah, what we normally use for that use cases is what is common for that client situation. So let's say the client is 30 years old, is married, and has one child. And then we could bring up clients like you have these and these goals. And so this is our normal approach when we consider the complete holistic advice situation.
Okay. Great. One more question, and I think we should be able to wrap it up, or hand it over to you both for sort of concluding points. So the sales summary, right, or the solution summary, what allows firms to really differentiate and work with the product. So final question is from the market, or from the audience rather, is on the target market segment. So Jamie, what can you tell us about who this is for? So the question says that it's maybe aimed towards the mass retail market, mass affluence. Maybe they were looking at some of the numbers earlier, but is it also relevant at the high? I know you said it's available to work with more complex use cases, but where's the line? What kind of client base are we talking about here in terms of the pitch, the focus?
Well, I'd say the way I would answer that is we have built this in the same way we have tried to build all of our solutions. And if you look at the clients we're working with, it is everything from sort of the ultra high net worth, the private banking end, through to, because of the efficiency and scalability of things like our portfolio management capabilities, that we are getting into mass retail and also starting to offer. There's more on the portfolio side, but we're making it economically viable for people to personalize portfolios at this mass retail level. So the idea of the Cashflow Planner and the way it's built with this API approach is that it can be sliced and diced, and it is, or can be made available to people across the full spectrum. It's just the way that the advisor uses it, and that's why we talk so much about differentiation and customization. So we did test it a lot internally to make sure, will it work at the mass retail level? What about if we're going all the way up to more even like the family office type level? Is it going to be fit for purpose? And the testing we've done so far suggests it will. When you look at what aixigo's sweet spot is, we have traditionally worked with sort of the lower tier one, the tier two firms, some of the names I mentioned earlier, but we do see use cases for tools like this, particularly if we're adding the research providers and going that little bit more off the shelf, that can be extended out. We think it's too good a tool to restrict use to just one tier of users.
Yeah, and you know, the family office spaces may be an area that has lacked technological power and capability, probably because of pricing and accessibility, right? They haven't had maybe access to modular solutions. Quickly, a final question on sort of deployment and pricing. Can you tell us a little bit about the model?
Yeah, it depends. We will look at things like how much it's used. So the number of advisors, the number of customers. Because of the way we work with clients, we don't have a price list, and we don't think that would serve our customers well. We try to look at every project as individuals, so we look at exactly what is required. This is the beauty of being able to divide the solution up in the way we do. We're not going to charge our clients for things they're not using. So we try and be very transparent. We try to get to a price as quickly as possible, but they're always the same variables really, which are or can be things like how many advisors are going to be using it. If you look at our wider solutions, we'll look at things like AUM, but we always try to come up with a model that works for the client. So if it's a new business model, we want to grow as they grow. If it's something that's fully established, it might make more sense to be very clear, black and white, and it will be just based on number of advisors. But there's, just like with the solutions, there's some flexibility around the pricing model.
Fantastic. Well, both we're coming up to the hour. We've had some good questions in, and I think a good discussion, and certainly a good introduction to the aixigo cash flow planning solution. So Jamie and Simon, thank you for that. I'm just going to hand it over to you for some final comments, anything you want to add at the end, just to sign us off.
Well, thanks very much, Stephen, for your time. Thanks to everybody who's listened. We are proud of this tool, and it is live, so we'd be delighted to show anybody that would like to have a look at it. We can pull in any use cases. You know, everything we've talked about is real, and we're happy to demonstrate that. So we can tailor those demonstrations to meet the requirements of the firms we're talking to, and we'd be delighted to have meetings and to show you what it can do in more detail.
Perfect, Jamie. Well, Jamie, Simon, thank you again. Much appreciated. Enjoyed that. The webinar will be available on Bright Talk, recorded fairly soon after this. It'll also be available on the Wealth Mosaic website, and I imagine on aixigo's in the not too distant future. Any questions? I'm sure Jamie or myself even will be happy to answer them. But we'll have another WealthTech Talks coming up in the near future, and we look forward to broadcasting to you all again. Thank you, Jamie, again, Simon, and your aixigo colleagues, and thank you all who listened in, and have a good rest of the day.
You too. Thank you.
Bye, everybody.
Thank you.
Bye-bye.